Has the stock market just crashed? Let's talk about it. I want to give you an update on a significant event in the financial world. Now, there has been recently a stock market crash. This means that the prices of many stocks have sharply declined over a short period of time, reflecting major upheavals in the market. Now, this is due to several reasons which have contributed to the downturn. Firstly, there are growing concerns about a potential recession, particularly in the land of the free, driven by recent economic reports. Additionally, uncertainty surrounding the Federal Reserve's decision on interest rates has also further destabilized the market, as well as global economic slowdowns, particularly in major economies such as China and Japan. Now, these have also made a ripple effect in the markets worldwide. Now, let's remain calm and avoid panic, as I'm going to play you this streamline of perspective videos about people talking about this and what you should know about it. Now, you can leave us your own thoughts in the comment section about what you know about this recession and the stock market crash.
Do y'all see this? Y'all see what's going on, right? This market crash that y'all seen just happen, this is just the beginning. So y'all better prepare yourself. Just imagine you wake up and you go and check your accounts and you seen all your money gone, all your money wiped out. I'm telling y'all, the financial apocalypse is starting, bruh. Y'all think this bad. Y'all really think this is bad. Wait till the real crash hit. This is just the tip of the iceberg. I'm telling y'all, it's gonna get way, way worse. I'm telling y'all, this is just a warning. This is a warning to let people know. But it's finna be a global recession. Y'all heard about a US recession. Nah, this finna be globally, bruh. I told y'all, we moving closer to where money, physical money ain't gonna be it. It's not gonna be worth nothing, bruh. I'm just saying, bruh, it's on the free fall. Nobody know how far this gonna fall this time, but it's already on decline. So, like I said, prepare yourself. With the market dropping like this, y'all might as well invest in ramen noodles or something. I mean, y'all can laugh all y'all want. Y'all think it's a game all the time, but I'm telling y'all, don't be surprised if they start charging people for oxygen. They gonna be charging us for breathing, bruh. Y'all ain't gonna be laughing then, huh? But anyway, let me know what y'all think about this down below in the comments. Share this, follow if you haven't followed, and like this video. I'm gone.
I told y'all, I've been telling y'all for a long time now. It's about to hit the fan, folks. You better get in order. Get into hard assets. I literally told, I had 2 or 3 private money lenders last week, or the week, no, and within the past 2 weeks, that wanted to lend me some money on some deals, and they had a bunch of money in the stock market. I literally told them within the past 14 days, all 3 of them, get your money out. It's any day now, the stock market is going to pull back really hard. You got to understand in bit of time cycles, right? When things feel like it doesn't seem right, go with your gut. Nobody can predict when the cycle is going to start and finish, but you can kind of feel it, right? Go with your gut on these things. Get out of funny money. Get out of, all the, when I say funny money, like, crypto and, stock market. Get your hard assets. Yeah, the stock market can go up real fast and you can make a lot of cash quick, but here's the thing about real estate. Even when the 2008 crash happened, as a whole, the whole United States, if you take that on average, we only lost 15% during the Great Recession of 2008 in real estate. Stock market, can't say that much. Don't get over leveraged in the stock market. Stay balanced. Get into hard assets.
Share prices collapsing from Tokyo to London and now to the big one, New York. As the day opened on Monday, the main measures of the US stock market were down between 3 and 6%. If there's another sharp fall, they may have to suspend trading altogether.
The very trades that have driven the stock market to all-time highs this year are starting to unwind. Now, this trend started on Friday, and that was because we got the jobs data in on Friday, and it showed that the jobs market and the labor market is starting to look a little bit weaker than economists had anticipated. That Friday number came in after we saw initial jobless claims coming in higher higher than anticipated on Thursday. So the 1-2 punch of those numbers painted a picture of a labor market that is starting to buckle under the weight of higher for longer interest rates from the Federal Reserve. We saw the sell-off starting right after Friday's jobs data came in. And then when Asian markets opened up on Sunday night, we saw that sell-off continuing. Markets are now pricing in a higher than likely percentage chance of the Federal Reserve cutting by 50 basis points in their next meeting, as opposed to 25 basis points. Now, as a reminder, the Fed has a dual mandate. One is to fight inflation and tame inflation, and the other is to make sure that unemployment is kept at bay. His latest jobs report called into question how well they've been doing at controlling the labor market, particularly because unemployment stayed above 4% for the past 3 jobs prints. In times like this, there's this phrase that really defines markets, which is to be greedy when others are fearful. And that's what a lot of guests who come on Yahoo Finance have been talking about. When you start to see a lot of fear in the market, that is a great opportunity for particularly younger investors to be getting in, especially in a year like this where stocks have been driven up to such high valuations, meaning they've gotten really expensive. Now they're starting to become a little bit less expensive. We're still in a record-breaking year of performance for the S&P 500, for the NASDAQ. So some investors and advisors would still say, hey, if you're seeing all of this sell-off happening, this might be your time to get in at a discount and then ride the rally back up for the second half of the year once the market recovers. The big question, of course, is whether or not that's going to be able to happen if the reasoning that is driving this sell-off is true, that there is some sort of economic sickness going on that the Federal Reserve was too slow to address. If we're heading towards a recession, that, of course, is going to be bad for markets. But even if for some reason the worst case scenario did come true and we were heading for a recession, long term we see stocks recovering and hitting higher highs even after recessionary time periods. So just because stocks are selling off because of concerns about the labor market and therefore the broader economy, that doesn't necessarily mean that it is a bad time to be investing.
What just happened to the stock market at 3 p.m. on the 1st of August? Well, we had terrible manufacturing data from the US. This is an important number. It's called the ISM manufacturing data. And the scary thing is exactly the same thing happened in 2007. We had terrible manufacturing data. So these figures just here say the US is already in recession. Now, we had the Federal Reserve last night say they weren't going to cut interest rates until September. And remember, there is quite a big lag between cutting rates and the economy feeling the benefit of it. So we're not going to really feel the benefit for the rest of this year. Survey. So if the numbers are under 50, then it means that the economy is retracing. Now, yes, we expected a little bit of a slowdown, but the actual number that came in was poor. But even worse was the employment, right? Those surveyed who were expecting to take on workers in the future, 43 is about as low as these surveys get. As those of you who have been following my page for a while, I have been waiting to get short this S&P, and now today, as of 3 p.m, I am fully short because this was a terrible number. This means that we're getting real earnings downgrades. And this is where the numbers don't lie anymore, okay? All these machines that chase momentum higher and higher and have been doing for about 6 months now. When we go into recession, the numbers do not lie. We're going to get profit warnings. We're going to get downgrade after downgrade after downgrade, okay? So we are now at where 54.60. It moves very quick. It's now coming up for 5 p.m. So we got another 4 hours the US market being open. Now in 2007, on the day that ISM was this bad, it was very similar numbers. 2007, the market finished down 3% that day, right? Are we going to finish down 3% today? It's only down 1 at the moment. So it's going to be very interesting to see the result. We'd be going down again tomorrow. We get all the economists come out and warn over the weekend. And don't forget, the chances are Iran is going to do something to retaliate over the weekend as well. People will not want to be long the market for that. So be very careful over the next 48 hours of trying to buy the dip. Just be careful. Tighten that risk in, really take it down. I've bought volatility, I've bought put options, I'm short the futures. This is not advice on what to do, trying to make sure nobody gets hurt out there, and market commentary. Now in 2007, when we had the bad number of the ISM, the same day Caterpillar had a big profit warning. So Amazon or Apple, which one is today's bellwether of the market? It could well be Apple. Imagine Amazon or Apple have poor numbers tonight. What would happen to them?
So today was a scary day for the market because it seemed a lot like 1987. Japan posted its largest loss in the stock market since 87, which was huge. A lot of people are freaking out. This is the problem I have with investing into the stock market. Not to say you shouldn't, but you're giving up your control to outside circumstances. And if you've got a large bulk or all of your investments tied up in the stock market, you should be scared. You should be actually really fucking terrified right now. And it should be a lesson that you need sustainable cash flow that in the case of a recession isn't going to go anywhere. One of my favorite businesses that you can start and still run while keeping your day job, still invest in the stock market, but at least build up some sustainable cash flow on the side is a home service business, specifically a cleaning business. You don't have to do any of the cleaning yourself. You can hire contractors to do it for you. But the thing is a lot of times during recessions, these businesses will fire their custodial staff because they're cost centers and hire cleaning companies because it's a lot cheaper. They don't have to pay the payroll tax, stuff like that. In residential, sure, some customers may pause cleaning during recessions or downturns, but you can always discount to keep them retained. And that's not to mention the high class customer that isn't going to cancel because recessions don't typically affect them. You can get started with one of these businesses with as little as $300. And I have a training in my bio. It's completely free. It's 42 minutes from start to your first $1 million in the cleaning business. How to grow, how to scale it. It's 42 minutes. It's free. Check it out in the link in bio.
The stock market was on pace to have one of its worst days in history, with the S&P 500 down over 4% earlier this morning, and the Nasdaq down as much as 6%. Now, since then, we have rebounded, and who knows, by the time you're watching this, the stock market could potentially go green. But either way, if you are invested in the stock market and you have been seeing this is probably pretty scary. Now, I have been talking about economic issues for quite some time, and the stock market being out of touch with what is actually going on in the US economy, because we have had credit card debt at all-time highs, personal savings at all-time lows, and we continue to see the unemployment increasing. But the stock market up until the last couple weeks has basically just been making all-time highs every single week. And I believe earlier this morning we briefly entered a technical crash, being down over 10% from the top. We have had headlines like Warren Buffett selling half of their stock and being at record high levels of cash with $277 billion on the sidelines, potentially waiting for the crash to happen. And I don't necessarily know what is ahead for the US stock market, if we're just going to recover this drop and start hitting new all-time highs later this month, but I do think that there is still shaky situations happening in the economy. Let me know your thoughts in the comments. Do you think the stock market is just going to recover immediately, or is it going to continue crashing down later this month? And follow me for more.
I'm gonna give you 3 major reasons as to why the economy could be going through this hard moment. Like, what's the cause for the stock market crashes? So the first reason is economic conditions. So economic downturns, excessive leverage, and disruptions in key industries can contribute to the market crashing. That's one of the reasons as to why we are seeing this happening. The other one is panic selling. Now, panic selling happens when investors fear further losses and rush to sell their assets, such as in the case of Jeff Bezos, as we've heard in that video. I'm pretty sure it's Jeff Bezos, if I'm not mistaken. This can actually further exacerbate market declines and lead to a crash. So imagine if major investors panic sell. That pretty much just means that they sell their shares. That can result in the market crashing, right? And that's one of the reasons as to why this market is just so volatile. Now, the other reason is unforeseen events. Unforeseen events being natural disasters, geopolitical tensions, or unexpected policy changes. Now, these can also trigger sudden market downturns. So if something happens, such as an earthquake, or something major, such as any natural disaster happens, or geopolitical tensions, we're talking about conflicts, wars, and all that, or unexpected policy change, this can also affect it. Now, let me tell you some of the major stock market crashes in history. So we're talking about 1929 crash, tremendous speculation during the roaring 20s, a significant expansion of debt and a decline in production led to the infamous crash that preceded the Great Depression. I'm pretty sure you've heard of the Great Depression. Now, how about in 1987? Some like to call it Black Monday. Now, this marked the largest one-day stock market decline in history, driven by a combination of economic factors and panic selling. So it was a combination of people like Jeff Bezos and economic factors which played into this phenomenon known as the Black Monday. One other famous one is the 2008 financial crisis. This was triggered by the collapse of the housing bubble and the subsequent financial crisis, leading to a severe global economic downturn. And how about a more recent one, which took place in 2020? They call it the 2020 crash. So this was caused by global fears about the spread of C-19. You remember the pandemic. You remember the virus that we were all afraid of. Yeah, that triggered it. Oil price drops as well, and the possibility of a recession. So it was just pretty much fear in this case. Fear played a major role in this. Now, the thing is that stock market crashes can actually have significant economic impacts, of course, but markets typically recover over time. I'm not a financial expert and do not take my advice on this, but I heard one person point out that this could be an opportunity for first-time investors because of the low entry prices, because of quality stocks on sale, because of diversification, and things such as that. I'm not the financial guru for this, and for more advice, I'm pretty sure you can look up some of the financial gurus and see what they are saying about this. But what really caused this stock market crash that we're seeing in 2024? So there are concerns about potential recession in the US, like I said, which has been a major driver in this case. Now, a worse than expected jobs report in July showing a rise in the unemployment rate to 4.3%. This has heightened these fears. We also have three other reasons, including interest rate uncertainty, including global economic slowdown, including yen carry trade unwind. Now, a surprise interest rate hike by the Bank of Japan led to a cascade of margin calls and forced selling, further exacerbating the market decline. Now, let me give you a recent aspect that has emerged in light to the stock market crash. Political and social factors, that is. So political uncertainty in this case, political tensions and policy changes could have also impacted investor confidence. For instance, former President the Trump train has blamed Vice President Kamala Harris for the crash, dubbing it the Kamala crash. So the Trump train. Yeah, he called it the Kamala crash. Now, geopolitical tensions, so ongoing geopolitical tensions or issues such as trade disputes or conflicts could have created uncertainty and negatively affected the markets. Now, do you remember the Black Monday crash that I talked about that happened in 1987? Well, the current crash is being compared to Black Monday that took place in 1987, one of the worst days in global financial history. Now, these factors combined could have created the perfect storm, leading to the recent market downturn. Now, I wonder why the Trump train has been throwing a lot of shade on Kamala Harris lately. He's even calling this stock market crash the Kamala crash. Just imagine that. Now, I'm pretty sure it's just because he fears that she's the perfect candidate for him to compete with. You know, she's got a lot of potential to win this election. Some people online were even saying that she makes current President Sam look like a Republican. That's how committed she is with this. Even though nobody has come out saying anything about the elite, I also would include that at the same time, everything that always happens in terms of the financial world or in terms of economies, in terms of anything that happens on a global level, you gotta understand that there's always somebody out there knows something that would happen or that is happening. But at the same time, this video is just for educational purposes and to spread awareness. Now, leave your thoughts in the comment section and tell us what you think about what is happening right now in the economic world. I'll see you in the next video. Please like, share, and subscribe. Signing off and take care.